a barometer sometimes of the growth outlook that we get. So we'll keep an eye out on the commentary as well. For now, let's get a check on the markets. We have Sacchitanand Uttekar, the VP Research Tradebulls, who joins in. Hi, Sachi. Good morning. Good to see you in. Markets flattish, but the sense you're getting is that the markets are consolidating only because of the skirmish we have on the border. But otherwise, it appears the markets want to look ahead. Is that the sense you're looking at? And what's the trade on the Nifty?
Good morning, Nigel. Absolutely, bang on. In fact, if you look at last couple of trading sessions, Nifty has been displaying narrow range price action, but it has maintained its closing above its 5-day exponential moving average. Even if you look at today's data, 24,300 looks like a very strong support, and on the higher side, we have a minor hurdle at 24,450. But if you look at the overall structure, the market is looking well positioned for a breakout rally, which can push the index towards 24,800 eventually in the coming week. This is what we are observing. And that's why we are recommending, building long positions, especially if you look at the Nifty Bank, which was outperforming a couple of weeks back. We saw a very, a significant pullback. The pullback was absorbed well. We saw a piercing line formation in yesterday's trading session near the 20-day exponential moving average support. And since then, even here, there's a fresh sequence on the bullish side, which is evolving. So we are of the opinion that the outperformance in Nifty Bank, would push or would help the Nifty, surpass that 24,500 kind of a zone. And we may see a rally towards 24,800, 25,180 eventually during this particular series itself. So we are recommending building long positions. From an index perspective, I think the reward to risk opportunity is much better in Nifty Bank. One can keep a stop loss at 54,650 on a closing basis and deploy some long positions in Nifty Bank for an immediate target of around 55,650, followed by a positional target at 56,000.
Right, Sachi, individual stocks, what would you recommend right now?
Good morning, Mangalam. ICICI Bank has been on our radar. It is one particular stock which has been doing significantly well. It has been, outperforming even the Nifty Bank performance. So if you look at the way it has consolidated, it looks like a classic bullish flag formation. We are expecting that this particular rally may continue towards 1485, eventually leading its way towards 1550. Which is the pattern target of this bullish flag formation. So we are recommending, building long positions at the current juncture as well, keeping a stop loss at around 1434 on a closing basis. The first target would be 1485, followed by a positional target of 1550. The other stock which has hit our radar and which we have recommended to our clients as well is Adani Ports. It's a very similar structure, a bullish pennant kind of formation on the daily scale, which has already given a fresh breakout. Now, if you look at the options data, even here, there looks like a trajectory open towards 1400, 1450. And that's why we are recommending, building long positions here, keeping a stop loss at around 1330 on a closing basis. The first target would be around 1400, followed by 1450.
Okay, all right. Thanks a lot for that, Sachi. For the time being, though, we'll slip into a short break. You come